The recent downgrade of Dangote Industries by Fitch Ratings has sent shockwaves through the Nigerian business and financial landscape, with the conglomerate facing significant liquidity challenges and operational hurdles. Concerns are mounting about the potential implications for the broader economy. In this interview, we delve into the details of the downgrade, its underlying causes, and most importantly, we will take a look at the potential fallout for Dangote Industries, the Nigerian financial system, and most importantly, broader economy. Here on News Now, joining me is Seun Dania, energy consultant. Thank you so much for being here, Seun.
Good afternoon. It's a pleasure to be here.
All right. What's your interpretation of the recent downgrade of Dangote Industries by Fitch? Did you, by chance, see this coming?
So clearly, the fact that the Nigerian government through NNPC pulled out from their commitment to the Dangote refinery project, would definitely have caused some of this, because it was a significant commitment that was supposed to add to the liquidity that they have presently. So it was difficult to see, but of course, we will all know that this kind of information is usually not in the public domain in terms of how they raise their capital. But it's inevitable, especially with the current challenges that we have in the country, the huge losses that Dangote as a company, as a group, has actually lost due to the Naira depreciation. It was coming. It was definitely coming. Because the Dangote as a group, they lost a lot of money. FX due to the devaluation of the Naira, or the floating of the Naira, so to say. Wow. Yeah, it was coming. A lot of companies have been reporting huge losses due to the FX volatility.
All right. I mean, we did see some of the companies like the likes of MTN and so on. But then again, what's the implication of this, especially on the group, and how might this affect investor confidence?
When these ratings are reduced, there's usually that psychological impact that comes with, that comes for the group, for the country, and for investors, So it reduces investor confidence, and not just for the company, for the country as a whole. So because a lot of people will definitely do, their investors will look into the country and see what would have been the underlying issues. Of course, the company as big as Dangote that has embarked on a very huge project such as that refinery project, and they're currently losing their ratings, which evidently credit ratings just definitely means that they will have less access to credit in terms of being able to get lending from other companies outside the country. And or even if they'll be getting at higher rates because it's perceived at higher risk. So overall, it affects Nigeria. It has a ripple effect on our economy. Investors will become more cautious about investing in Nigeria, looking that a company like Dangote will definitely be going through these kind of challenges. And other businesses definitely would face a lot of issues, with higher cost of borrowing from the international market. And we also let know that... All right, go on.
Joe, let me just quickly come in here. Does this point to the inability, most importantly, looking at the fact that the federal government has been trying to address the problem of volatility in the Forex market? With what we see here, does it point that there is a very, very strong resistance and an incapability of the federal government being able to do so?
So the issues have been, I think they're not simple, but I believe that they are very straightforward in terms of, so, for instance, most of our products, right, even in the manufacturing, in the context of manufacturing, context of building a refinery, most of all the products are imported into the country. So definitely they have to. The capital is needed in FX, in dollars. However, Dangote, the cement, sugar, most of the other services, products and services that they sell locally are sold in Naira. So when there is all that huge discrepancy between getting Naira and dollar, the companies lose a significant amount of money. So the government, should have put a lot of all of these things into consideration. That's why, some experts have recommended a managed peg, as opposed to just completely floating the Naira and expecting, market forces to determine. These are the kind of situations that we would experience. And then how long can we actually hold? How many businesses will stay true to these kind of challenges, because it's difficult selling products in naira and having to then buy the raw materials with dollars. And the truth is that with the low purchasing power of Nigerians cannot afford to pay the real price if they were to, factor in all those things.
All right. But
so yeah, the government needs to come in.
But don't you think that this rating is coming a bit too early?
I don't think so. The project. The thing is, the good news is it's not all gloom and doom. The good thing is that the refinery is already coming on stream. Things are already happening. So there's the high possibility that when the Dangote refinery starts selling, refined products to the market, their liquidity position would increase, and then these ratings can always, go back. But the way that the ratings happen is, they actually do them over time, and this kind of rating that has been done is basically just the ability for the short term, for them to be able to meet up with their short term financial obligations. Meaning, there's a possibility that, of course, the Dangote group has gone back, to speak with their investors or their lenders to renegotiate terms of their current positions or current debts. So those kind of things shows that, well, in the short term, they might not be able to meet up, which means, so it's not too early. It's done. It's a kind of like a routine thing that is done. Fitch, basically, it's just a concern that they are expressing, so their rating starts from, I think, like AAA all the way down to D. And the rating for Dangote has gone down to B+. So they definitely were probably like, their rating before was AA, which was almost like, the highest rating you could ever get. And then down to B+, that's why it sounds like but they're still in very good standing.
All right. Thank you, Seun Dania, energy consultant, for joining us here on News Now and helping us to see reasons why the Fitch ratings are very, very important and a huge concern. Thanks for joining us.
Thank you for having me.